Welcome to the weekend edition video of technical analysis here in Grok Trade. This video is good until Sunday, June 26th of 2011. My name is Miguel Vences, a mentor and an analyst here in Grok Trade, and I welcome you to this, the weekend edition of technical analysis as we head into the weekend. But first, today, the action all to the downside, a bearish day. Dow Jones closed 0.96% to the downside. SP 500 1.17% to the downside. Nasdaq 1.26%. Russell's 0.88%. So all around a bearish day, more than confirmed by the movement in the VIX, 9.49%. A big spike, especially compared to the movement in the indices, and the bank close to the downside, 0.34%, showing more strength than the rest of the indices. Now let's go to the charts, and first, the SP 500. And I start with this view so that we can take a look at this huge symmetrical triangle that is working as more than significant, very strong support and resistance. And as we know, these symmetrical triangles tend to resolve in a pretty strong move to either side. And this is why we are watching this formation constantly. We do not want to be taken by surprise because of course that would cost us a lot of money. Now taking a closer look to the action today, we formed this candle closing right above the 200 moving average. And so as we head into the next week, this line of the 1264 will be a very important line of support. And right below we will have this big trend line, which also should serve as support. Of course, if we were to trade under this line and pierce this line to the downside, then we'll be in huge trouble. At the beginning of the week, we did pull back in what was a tasty bear pullback, and by the end of the week, we pretty much got as far down as we can without a major commitment of the markets. So at the beginning of the next week, it will be very important to see how we behave in terms of these two lines, this trend line and this 1264 line. If we break down, then it will definitely be a big sign for the bears to get all the way in there. Now let's take a look at what the weekly of the S&P 500 is telling us. What we can see here is that we are on a pretty extended down leg, and at the end of the week after this doji, what we can see here is an inverted hammer, which is a bullish signal with a higher high and a higher low, and this inverted hammer after this doji may be indicated that the markets are looking to turn around from this extremely extended down leg. And as we can see, we have some space to go up. So I think this is a very important pattern to be looking at for next week. Now in the monthly S&P 500 chart, we see these green trend lines. The blue trend lines really are from my daily charts. And we're still in this candle, in this month, this is the activity on this month, we see this rising wedge coming in these two green trend lines, but we did find, at least up until today, support in this line right here, which is around the 1260 area. Of course, if we went under this line, then we will be in pretty strong trouble, at least for next weeks, because we do have some time, some space here until we reach our trend line right here. The Nasdaq, similarly too, in this huge symmetrical triangle. And the good news, or the bullish news, is that for this past week, we were trading under the 200 moving average right here in this red line. And today, we close at the 200 moving average, which will now serve a significant support. So if the Nasdaq manages to stay above this line for next week, we could have a nice rebound. However, if we were to break that level of support and to go under the 2638 level, then we would be in pretty serious trouble. Of course, 2607, that's another level of support that will be key to be watching. To the upside, the 2686 level is going to be very important. Let's see what happens to this trading range of the past 4 days, see if we can go over or under. Now, as far as the weekly is concerned, in the Nasdaq, we actually had a bullish week. We formed a higher low and a higher high. Not only that, but the body of this candle is engulfing the previous one. So higher high, higher low, bullish body engulfing the previous candle. It's looking fairly good if we manage to continue this week's move to the upside. Of course, we're getting close to this zone of support, these trend lines, which are definitely levels to be very, very mindful of. Right here around the 2600 points level. But if we manage to continue the activity of this week and in the monthly, as we can see at least until today, and remember we still have a few days next week to finish forming this candle, but we actually did a touch and go in this zone of support. So if we manage, or if the markets manage not to revisit this line, this level of support, we'll be in fairly good shape, at least for the beginning of next week. The Russells, also similarly in a symmetrical triangle, as we can see today, trading around the 20-day moving average, trading during the week during this small trade, which can be a high base because it's produced after a movement to the upside. So these are the two levels for us to be looking and watching for the Russells, the 793 and the 806 level as well. So we are well over the 200 moving average right here. So the one to be watching is this yellow line right here, which is the 20-day moving average, and this close range right here. So it could really go either way. In the MACD, we're over the zero line with a positive tick. Now let's take a look at the Russell's weekly chart. We also have definitely a bullish candle for the week, a higher high and a higher low after a doji. So it's actually a bullish candlestick. So we'll see if we can continue the change from this down leg into an up leg. And in the monthly, what we can see, we are in the middle of this moving candle, which after reaching a level of resistance, it's on its way down. So one of the key levels to keep watching in the Russells is the 780 level, because if we go under, if we revisit the lows for the month, then we will be in a lot of trouble. So just to sum up, for next week, even though the dailies and the weeklies can go either way with some signals for a nice rebound, we do have to keep in mind that the monthlies are in disagreement. The monthlies seem to be forming a down leg, but the dailies and the weeklies are giving some signals of a possible bounce to the upside. So it's very, very important in this market to make sure that we are extremely cautious. Remember that capital preservation is our first goal as investors. So before committing any capital, we have to wait until the charts, whichever chart we're choosing to use for our trading, give us a clear signal according to our trade plans to buy or to sell. We have to avoid trying to anticipate the markets. That's what beginners do to lose their money. But here in Grok Trade, we are teaching you and guiding you on how to think like smart money. So as we head into the weekend, make sure you have a clear plan that involves risk management, especially hedging techniques and the willingness to sit on your hands or do some day trading until the markets give you the right environment, the right signals to go into swing trading mode again. Greetings to Des, who is in Las Vegas doing a mentorship. Have a great weekend and a safe trading week. I know that here in Texas, the weekend is perfect for either the beach, the swimming pool, or an air-conditioned home with a bunch of movies. So whichever way you decide to spend your weekend, have a good one and stick with us here at Grok Trade.